Welcome friends. In this video we are going to discuss about hedge funds. So what is there in hedge funds, why this is important, and hedge fund purpose, different types of hedge funds, and what are the interview questions may be asked in hedge funds. We will discuss on that hedge funds. So what are hedge funds? Firstly, hedge funds means or investment vehicle. It is one investment vehicle and it have range of investment strategies, different strategies it will use, and it main achieve is get the high return in the regardless of market conditions, whatever the market conditions, it may be in bearish market or it may be in bullish market. The main achieving the highest return is the main aim for hedge funds. This is typically reserved for institutional investors or accredited investors. Accredited creditors means we have HNI, that is high net worth individual person. Due to their complex structure and high fee, they will potentially risk will be there. And here the history of hedge funds means the first hedge fund is generally considered to be Alfred Winslow Jones, that is the person A.W. Jones and co. In we have in SFM the theory, Dow Jones theory there na, that same type as A.W. Jones and co. He is the first person who used this hedge funds. This was established in 1949 after the independence was got. After 2 years, it uses long short equity strategy or betting on both rising and falling stock prices. Since the hedge fund industry has grown into global behemoth or managing trillions of dollars in as assets. Now, what is the meaning? What is the purpose of hedge fund? Here, hedge funds, firstly, hedge refers to use various strategies to mitigate risk, such as it will for mitigating the risk, it we may go for short selling or it may go for leverage, it may go for derivatives. And however, these hedge funds are not risk free, so it have not a risk free, it have more risk and can be subject to significant losses. The primary purpose of hedge funds is to generate superior returns for their investors. So here the primary purpose of hedge funds is to get superior returns for their investor. They achieve this through a variety of means, for including market inefficiencies, short selling, leverage, or alternatives. So market inefficiency, a variety of means will include. The primary purpose of this hedge fund is to generate a superior return for their investors. To achieve this variety means in market efficiency, if the market is inefficient, that is exploiting temporary mispricing in securities, or short selling. Short selling means profiting from falling stock prices. So stock prices are falling, so stock prices are falling, then also you need to get the profit. Leverage means here amplifying a return, that is both positive and negative by borrowing money. So if you see in the balance sheet, they will get the investment. For this investment they will invest from more borrowing amount, and they have leverage alternative investments, so investing in assets beyond traditional market or bonds, such as private equity or real estate or distressed debts. So in this they will invest. Types of funds, so hedge funds have different types of hedge funds will be there, with each with its own unique investment strategy and risk profile. So some of common type may include for different strategy. First one will be long short equity. Here long short equity means investing both long and short positions. Maybe for long it will take 70% and they will play game with the 30% short. And event driven means focusing on event that can potentially trigger large price movement, such as mergers and acquisitions or bankruptcy or spin-off. So event driven, they will focus on one event which have triggered the large price movements. And after that macro, that is makes bet on broad economic trends, so they will bet on trends and such as interest free rates, currencies or commodities will be used. And quantitative strategy, here quantitative strategy means uses computer models and algorithms to make investment decisions. So here they will use a more technology for the purpose of to make the hedge funds. These are different hedge fund strategies will be there. One is long short strategy, event driven strategy, macro strategy, and quantitative strategy. Here the main objective of hedge fund is to primary objective of most hedge fund is maximize the net return for their investors after fees and expenses. However, some hedge funds may also have secondary objective, that is preserving capital, generating income, and achieving specific investment goals. So here examples of hedge fund companies are some Bridgewater Associate, Renaissance Technologies, Elite Management, DE Shah and Co, Baupost Group, and some company names. Means here hedge funds name may be quite varied, with some being straightforward description of their investment strategy. Here they will, some examples may include Pursuing Square Capital Management, Tiger Global Management, Loan Pine Capital, Paulsons and Co. These are the persons will be there. Here the different strategies will be. Here some earlier we have mentioned some earlier, that is long short strategy, macro strategy, quantitative strategy, and event driven strategy. After that we have some other strategies also, some common strategies which may include. Most common strategies are arbitrage strategy. Arbitrage strategy means here the where price inefficiencies will be there between the two different markets. One market will have high price, one market will have low price, so exploiting price difference between identical or similar assets in different markets. So they will go with the different markets. Activism, here taking an active role in the management of company in which they invest with the goal of improving their performance. Next, distressed investing means here the investing in company that are financially distressed. For example, that we take Lalita jewelry person, na, that person will, when he buy that Lalita jewelry, when company is in distressed position, so that type of companies will identify this hedge fund, they will invest in that firms, hope of profit from turnaround. Next, convertible arbitrage, taking advantage of price relationship between a company's convertible bonds and its stocks. What is the life cycle of hedge funds? Life cycle of hedge funds can be broken into several stages, but in private equity it have 1 to 10 years it is, and majorly it have 4 stages will be there. In life cycle of hedge funds, it also first it will rise, fund rising stage will be there. Here raising capital from investors, so from different investors they will raise the capital, and after that investment, this raised fund will be invested in market, that is deploying capital into various investment strategies. Next, operations, here managing the funds portfolio and generating returns, so they will manage the fund portfolio and generate returns. Next, distribution, here returning profits to investors and collecting fees. So first one will be fundraising will be there, and after that they will invest, after that they will operations, and after that they will distribute. At the time of distribution they will collect the fees and liquidation. This is windowing down the fund and returning remaining capital to investors. Next, this is stages. So one is for fundraising strategy, one stage fundraising stage, they invest, the operations and distributions will be there. Every fund same, maybe different classes will be there, but almost these stages only, the fundraising stage, investing stage, operating stage, and distribution stage will be there. And after that liquidation stage. In financial statement, what are the items may there? Here hedge funds not required to publicly disclose their financial statement, because these are only for collect money from their high net worth individuals, so less persons will be there. It is not required to publicly required to distribute, and however they do provide them their investors, so they need to provide their investors. Some of most important financial statements for include will be, that is statement of assets and liability, that is balance sheet. This will show funds assets, liabilities, and net assets. And statement of operation, that is income statement, which will show funds revenue, expense, and net income. And statement of cash flow, that is show the funds sources and uses of cash, so how they source the capital, how they use the capital. Now some general entries we need to pass for preparing the books of accounts regarding finance transactions in company's accounting system. So hedge funds uses a variety of general entries to record their investment activities such as purchase and sale of securities, receipt of interest and dividends, and payment of fees and expenses. So we will see what are the entries we will post. Firstly, what we are tasked about. So as of now we are tasked about relating to hedge funds. So hedge funds means what? These are complex investment vehicle that can offer high return but also involve significant risks because they have risk and they will get the return. They are not suitable for all investors who are this retail investors mentality. They are not for that person, it will not suitable, and only accredited investors and institutional investors should consider investing in these funds. Regularly the general entries in hedge funds are depending on specific investment activities and portfolio combination. So we have different strategies now, long and short strategy, short only strategy, and distress strategy, and macro strategy, event driven strategy, and after that arbitrage strategy. So quantitative strategy. So these different strategies will be there. So different strategies may vary, but we will see some example common general entities what are there. So when there is investment, so purchasing of securities means whenever you purchase the securities it will increase your assets. So when asset is increasing you need to debit, that is debit investment account debit, credit cash or margin loan account. For example, debit stock XYZ for $1 million if you purchase the stock X and XYZ, and credit cash for $1 million. Next, sale of securities. Here debit cash or margin loan account if you sell the anyone and you need to get the cash. So debit what comes in and credit what goes out, that is investment account. For example, if you cash you will be $2 million and credit will be stock of XYZ, and receipt of dividend or interest. So if the XYZ company he paid any dividend, then you will receive the cash. It means debit what comes in, that is debit cash account debit to credit income account. For example, debit cash for $10,000, credit dividend income for $10,000. Accrual or accrued interest. So debit accrued interest receivable account, credit interest account. Example, debit accrued interest receivable for $5,000, credit interest incomes. So accrual will be debited and interest incomes will be credited. So all for general entries you need to remember when asset will be there. If asset is increased we need to debit, so asset is decreased we need to credit. It is the thumb rule. After that we have liabilities. For liabilities, if it is increased we need to credit, if it is decreased we need to debit. Here debit credit will be there. And for incomes, so for incomes, when income is increased we need to debit, income is decreased we need to credit. Or after that we will get the expenses. Expenses increases we need to debit and expenses decreases we need to credit. And after that we will get the equity portion. Equity is like a same, increasing credit, decreasing debit. That is will be there for general entries. So whatever general entries we need to remember this thumb rule. So this is other than golden rule. If you remember the golden rule it will fail in some cases. So because of that golden rule is failing in some cases, we need to focus in these rules. Here for accrued interest, debit accrued interest receivable. So for receivable account we do not have any golden rules. Means firstly in golden rule we have nominal account or real account, and another account will be there, I think losses are something nominal account. So nominal account, real account, another account will be I don't know, I forgot it. So after that fees and expenses. So fees and expenses means expenses will be increasing. So expenses when increasing we need to debit. So debit management expenses, debit expenses account debit to credit fee payable, it is accrual entity. And when performance fee, debit performance fee expenses account debit to expense account debit to credit performance fee payable. And operating expenses, debit expenses account debit to cash account, that is if you pay the cash. Next, derivative related. So if you purchase any derivative, so it will become the asset. When asset is increasing, debit derivative account, credit cash or margin loan account. For example, debit put option on ABC for 10,000, credit cash for $10,000. Settlement of derivative. So debit or credit cash margin loan account, debit or credit loan loss of derivative account. So here debit cash for 20,000, credit put option for ABC, a put option on ABC for 10,000, or if it is a gain, credit gain on derivative of 10,000 rupees. So you will get that 20,000, you are selling that put option and you are getting the gain of 10,000. Next, after that, when you have short selling, so short selling means what? Here you need to borrow the security. So borrowing of security for short seller. So if you are borrowing, debit short securities account. So for borrowing you need to pay cash na, so credit cash account. So debit short stock XYZ for 1,000 shares, credit cash for $1 million. And when you are returning the borrowed securities, so when borrowing securities is returned, you need to pay cash. So cash account debit to credit short security account. Now debit the cash amount $1 million, credit short stock XYZ for 1,000 shares. Next we need to mark to market, that is daily settlement basis. So for short position, debit credit will be there. Debit the debit credit, it will be gain or loss on short shell account. So debit credit short term securities. So we need to debit gain on short shells for 50,000, debit short stock XYZ for 50,000, or margin amount. So margin loans. So margin loan account, for margin loan we need to draw down on margin loan. So when margin drawn down, debit cash account or credit margin loan account, and debit cash for 1 million, credit margin loan payable for $1. So it is margin loan. So margin loan means you are getting amount na, so debit the cash account and loan is increasing, credit loan account. So liability is increasing and amount is decreasing. Here we need to credit. And after that, when you need to pay that loan amount, when you are repaying, the loan amount will be decreasing. So when liability is decreasing, you need to debit. So debit margin loan payable account, debit credit cash account, because cash is going out, and debit margin loan payable for 1 million, credit for 1 million. Now for that loan you need to pay the interest means it will expenses. So first we need to write the accrual entity. So accrual entity, debit expenses account debit to interest payable account. So debit $10,000, credit interest payable account. Next, cash management. Here for cash management, deposit of investor capital. So debit cash account, credit investors account. So whenever the cash management, if you are deposit of investor capital, so investor is giving capital means you are receiving the amount. So debit the cash account and investor capital account will be credited. So capital will be increased. Whenever you are distributing profits to investors, so when you are distributing profits to your investor, capital account will be debited, because we need to reduce the liability. So capital account debit to cash account, that is debit investor capital for 5 million and credit cash for 5 million. Whenever transferring funds between different currencies, so we need to difference is there. For example, debit cash account or credit cash account. So when debiting foreign currency and crediting local currency, for example, debit Europeans or euros for 5 euros millions, credit cash for USD for $5 million. Next, when private investment there, so your private investments, you are investing in one private company. Whenever you are investing in private company, it will become asset. So investment account debit to credit cash or bank account. Here debit, for example, debiting in ABC company for $2 million or crediting cash for $2 million. Whenever you are receiving dividend or distribution from private company, we need to getting the cash, means debit cash account debit to credit income account. And sale of stake in private company, if you are selling for that private company's stake, then debit cash account or investment account or credit investment account. If you receive the cash immediately for selling that investment, you need to debit that. Next, whenever distressed debt, so here for distressed debt, you are purchasing one distressed debt, that is investment only. So debit investment account, credit cash account. So distressed company means XYZ or Lalta, usually in our example, investment in that company and credit cash account. Restructuring of distressed debt, here debit or credit investment account if you are restructuring, or debit or credit gain or loss on distressed debit account. So you need to debit investment account company for 8 lakhs, credit distressed debt for company 5 lakhs, and if you get the credit, you need to credit. If you get the gain, that is income will be credited. If it is loss, we need to debit. Next, after that, if you are written offing the bad debts, whenever written offing the bad debt, we need to, it will be like a expenses. So expenses means it will be debited. So debit expenses account, credit investment account. For example, debit expenses of for $1 lakh, credit investment in XYZ company for $1 lakh. Next, real estate. If you are going for real estate company, so purchase real estate properties, so it is also investment account debit to cash or bank account. So investment in private company for 20 million, cash account for 20 million. And receipting, if you are invested in real estate, you will get the rental income. So rental income means it is income. When you increase income, you need to get the cash. So cash account debit to rental income, or cash account debit to income. Or if you sell that real estate, you will get the cash and investment account. So cash or account debit to investment account. If it is gain, you need to credit that gain. If it is loss, you need to debit that loss. Or if there is any foreign exchanges, so for foreign exchanges, gain or loss on foreign currency holdings, so we need to debit or credit. So if it is loss, we need to debit. So loss on foreign currency account, we need to debit. Or debit or credit cash account for foreign currency. If it is debit gain on foreign currency, or debit cash euros for 10,000. For hedging the foreign currency exposure, so we are hedging means we are using the derivative account. So debit derivative account, credit cash margin loan account. So debit foreign currency forward contract for 1 million, credit cash for. So here, and for this we need to add some questions. So I am asking different questions what we are discussed above. So firstly, you need to walk me through a recent investment, this you research, and what are your conclusions. So for hedge fund, they may ask you what are the recent investment you have seen, what is your conclusion. So now you need to answer in different. So I recently researched the potential of electrical vehicle charging companies. So this is the charging company which is booming, another booming company, electrical vehicles charging company. I analyze the industry trends, government policies, and competitive landscape. So my conclusion is that company is providing fast charging solutions in key locations, were well positioned for significant growth as EV adoption accelerates. So it is EV vehicles are increasing. So I identified companies that XYZ has a particular promising player due to their innovative technology and strategic partnerships. So these are the recent investment which is growing companies. If these hedge funds want to invest in this company, it is better option. Where there is electrical vehicles is a better option. Next, after that, explain how you would value company in the retail sector. So for retail sector, I would use a combination of valuation methods. We have different methods will be there for the valuation. We have discounted cash flow method, or comparative company analysis method, or multiple analysis method. So two analysis methods. One is multiple analysis method, another one is companies comparable companies analysis. Another one is regularly using method, discounted cash flow methods. Now I would assess the company's financial health and growth prospectus and competitive advantage and market risk to determine a fair value range. Next, describe time you use data analysis to inform an investment decisions. Next, here at the time of our internship, that is doing a financial internship, I use it to data analysis to analyze to identify undervalued stocks in the healthcare sector. So if you done any analysis or undervalued stock at the time of articleship or at the time of internship, at the time of working in some companies or external resource, you need to code that one. So which sector you have analyzed, you may analyze real estate, or you may educational sector, or you may healthcare sectors. So in what you have observed, so I have observed in health sector, I see for companies with strong financial positive analyst ratings and low valuations related to their peers. This is lead to me recommend investing in company ABC, which subsequently outperform the market by 20%. How do you stay up to date on market trends and news relevant to your investment focus? So what are the resources you are using to make updates? So some persons may use money control app, some persons may use newspapers, that business standards or Forbes news or economics times news. So whatever the resources you are observing in daily basis, you need to code that resources. For example, I follow financial news websites, that is CNB 10 TV channel is there, it will updating every time. And some industry publications I have seen, and I have seen that research reports, that Sherkan reports or angel investors report. We need to code that some companies which are providing research reports. And I also attend some investors conferences and webinars to stay ahead of the curve. Additionally, I network with professionals in the value investing community to the exchange insight and ideas. Now they will ask some behavior aspects. So why you are passionate about working in the hedge fund industry? So they will ask the why you are choosing for hedge fund industry. Now we need to answer why the reason. For if you have reason, you need to quote that one, or I will give you some sample answer. So why I am entering into this hedge funds? Because I am fascinated by the intellectual challenge of analyzing the complex financial market. So I like to analyzing where complex financial market is there. So hedge fund is a complex market financial. So I want to analyze that type of financials and identifying where undervalued opportunity is there. So in hedge funds, they will identify underperformed opportunity, they will reject that, they will go for the other opportunities. And I am also drawn down to phase-based or dynamic environment of hedge fund industry and potential for significant returns. So you are searching for dynamic environment. This is dynamic environment where will be hedge funds, and for potentially significant return, because the hedge fund is giving the highest return where the market conditions, whatever the market condition may be bullish trend or bear trend, the hedge fund persons will try to get the highest returns, that they will get the absolute return. So that's the reason I am entering the hedge fund. This is showing my interest. Now tell me about a time you made a mistake in investment analysis and how you are handled it. So for example, if you have done some financials or you have done general entries posting, so whenever you are done some mistakes, how you are rectified. So for that, for example, in during a stock pitch competition, I overestimated the growth potential of a technology company based on limited data. So some company data is there, it is a growth potential company. From that company I have taken some overestimated, so which have limited data. From that limited data I have given a overestimation on that company. That I learned from this experience to conduct more thorough research and consult with experienced investors before making investment decisions. So whenever you are giving some investment decision, we need more experienced person consultation, we need to go through research. For that research we need more data. So because we have limited data, we are provided overestimation. It is not at all good. Next, how you handle, just a second, how you handle working under pressure and tight deadlines. So it has some deadlines will be there for this December months will be there. Generally in our accounting in Indian standards, we have financial year starts with April and end with March, but this US based companies, all their financial year will be January it will start and it will end on December. So I thrive in high pressure environment and stay focused on prioritizing task. So which is priority will be there, I will do that priority task first and managing my time effectively. So because I completed priority work first, after that I will ensure which work is less involvement required or less importance, I will postpone that later. It will be time management will be better. And I also communicate openly with my team and seek help when needed to ensure deadlines are met. So it is also I will ask to our team and I will take the support from our seniors who is there, our leaders. So I will ask from that person openly, I will not hesitate to ask. So it is my team. Describe your ideal team investment environment and how you contribute to it. So I value a collaborative team environment where ideas are freely shared and respected. So it is better the team, how the team will be required, the team must be how freely shared, means whatever their opinions, so it may be positive opinion or it may be negative opinion. So we need that person who ever providing the negative opinions also in front of others. So it is better to correct myself. So it is, I also respect that type of negative feedback and I will respect that and I will try to rectify myself, and I contribute by bringing the analytic perspective, strong research skills and willing to learn from others. So it is better to get the new knowledge. And I am also a team player who actively listen to feedbacks and support my colleagues. So in team I am also one member, so I will listen, it is active listening. And I also, how, what are your salary expectations? So my primary focus is on securing an opportunity to learn. Don't quote directly figures. So you need to give some explanation. So primary my focus is on securing an opportunity to learn and growth with your team. So within your team, that is the main objective. After that I am confident that my skills and dedication will contribute significantly to your firm's success. So you need to quote another one. So firstly, I need opportunity to learn the new things. Secondly, I have some skills, that skills will contribute your firm success, and I openly to discuss a compensation package that is fair and competitive for my experience level. So you need to ask for that person first, what is the fair and competitive for my experience level by observing you. After that they will quote some amount, then you may quote some amount. Next, here some fund related specific questions may ask, what do you know about our firm investment strategy and track record? So they will asking about their company without knowing the company details. If you are entering into that company's interview, it is offense, illegal. So without knowing that company vision, mission and recent trends and overview of that company, you must know before entering into company's interview. Now we need to answer, I understand. So some specialized, means customized answer I am providing, you may use it. So I understand that your firm is specialized in value investing. So they are fundraisers, because they fundraise they will invest. So I am quoting that one. So you are specialized in investing. So I have understand that item. Next, and has a history of generating superior returns. So hedge funds definition, what is there? Investing money in a superior returns. So I know you are investing in getting a superior return from its investors. I particularly impressed by your success in identifying undervalued companies in emerging market. Means this is relating to strategies. So different strategies is there. Distress strategy is there. Distress strategy means if the company is investing in distress strategy, means it is outperforming company. They are identifying. So you are impressed. You need to tell that I am impressed for your company, how your company is identifying this undervalued company. Next, what are your thoughts on the current trends in the value investing space? I believe that value investing remains a highly relevant strategy in today's market. So it is required. So you need to invest remains highly relevant strategies in today's market. Has there always pocket of inefficiency and mispricing. So it has inefficiency will be there and mispricing will be there. I am particularly interested in exploring opportunity in sector like healthcare, finance and industry which is growing. Next, why would you be valuable addition to our team? So you need to give your valuation. So how you value yourself or what is the rating for yourself here. I bring a fresh perspective. So I have some strong analytical skills and deep passion for value investing. So I have passion on investing. So that I am give some different perspectives which will be valuation for that our team. That I am eagerly learn from your experienced team and contribute to your continued success. So I am ready to learn from this group, this team, and I also give my contribution to continue to success in this company, our team. Next, I am confident that my dedication and work ethics will make me a valuable asset to your firms. So whatever I have knowledge, whatever my dedication, whatever my work ethics, it will value your asset. Next, some questions will be explain complex financial concept in simple terms. So hedge fund is a complex, we are told now. Now complex financial concept means what? Here that beta will be used for valuation. So beta is a measure of stock volatility related to overall market. So when there is a overall market, the beta will be used to indicate the risk. A beta of 1 means the stock moves in line with market, while beta of 2 means it is twice as volatile. So market is one side, stock moves in line with market. So when beta of 2 means it's twice as volatile. So volatile is 1, twice is volatile. Here investor use beta to understand the risk associated with individual stocks and build a diversified portfolio. Next, what challenges do you see facing the hedge fund industry in the next 5 years? So you need to give the projection of hedge funds. Here increase regulations. So as of now the hedge funds does not have much regulations as compared to mutual funds. Mutual funds are more regulated because they are invested more retail persons and they do not have much knowledge on that funds because that mutual funds were fully regulated. But where has these hedge funds are only these persons HNI accredited creators who have more knowledge in the market, they only investing. And in future this also come into regulations and it will also use this technology advancement, that is AI tools. Further we have in different strategies, we use one strategy, that is quantum tech strategy. So in quantum strategy means what, there have different data will be taken from through using the technology. So here the technology may be AI tools from competition and competition for alternative investment strategy for some challenges I see facing the hedge fund industry. However, I believe that the firms that adapt to these changes and maintain focus on generating alpha will continue to thrive. So for risk it will be beta, for return it will be alpha. We will consider that one. Next, after that I think I will give some equalization and rebalancing concept. So where here equalization means what and rebalancing means what. Equalization means it is one process which is used to ensure that investors in a fund are treated fairly. So investors will treated fund are treated fairly. Here, especially in scenario where investors might join or exist in the fund at different times. So if you see in partnership, partners may come, partners may go at a different point of time. Same here also in the fund, investors may join or exist the fund at different times, because these funds are open-ended funds. These hedge funds are open-ended funds, and these become crucial in open-ended investment vehicles such as mutual fund or hedge funds. So where investors have flexibility to buy or sell shares based on their performance. Here, so that the equalization is a process to ensure that investors in fund are treated fairly. So treated fairly, that fund will be treated as fairly. Now some key terms. So fair treatment means what? Here fair treatment means equalization aim to maintain fairness by adjusting the value of shares or units based on the timing of investment and withdrawal. Some person is adding, some person is withdrawing, then we will adjust that number of shares or adjusting the number of units, because then it is easy to equal. And timing disparity means here investors may contribute or redeem their investment at different point of time, leading to imbalance in the fund holding. NAV, we need to adjust the NAV. NAV means net asset value. Equalization often involves adjusting the NAV of the fund to ensure both existing and new investors are treated equally, because the existing person, for example, today one fund last 1 year one fund is started, today new person is joining. Today when new person is joining, we need to equal this both persons, then we need to adjust that NAV, so both existing and new investors are treated equally. For live example, we will take one example. Initially investor A and B both invested 10,000 each in the mutual fund. Here resulting will be total fund size will be 20,000. Next, here unequally, after sometimes investor wants some money, so he have withdrawn 5,000. That if the fund size will be 20,000, he withdrawed 5,000, then it will become 15,000. Okay, sometimes withdraw 5,000, reducing the total fund size to 15,000. Now we need to equalize the equalization of process. Equalization ensure that investor B remaining investment is treated fairly, considering the change fund size. If the remaining investment of investor B is still $10,000, the equalization process may adjust the NAV per unit to reflect these changes. So first, initially NAV formula will be total assets minus liabilities. It will become total fund size divided by total number of units, that is total number of outstanding units. So firstly A and B will be there. Invested 10,000, 10,000, it will become 20,000. So 20,000 will be numerator, 2 units will be denominator. So it will be NAV will be 10 rupees per unit. Next, after withdrawal, the new NAV per unit would be calculated, because the amount will be 15,000. Now here units also we need to adjust, because 15,000 units only there, so 1.5 adjusted NAV, then 10 rupees per unit. So new NAV is same for initial NAV, we need to adjust the units, because that person withdrawal A person is withdrawal, so we need to adjust. Even though the total fund size decreases, here total fund was decreased from 20,000 to 15,000. Investor B remaining investment is still valued at 10,000, because 1,000 units will be there and NAV will be 10 rupees per unit, maintaining the fairness. Now in this example, equalization ensures that remaining investor is not unfair. So whoever standing in the fund, he will not get unfair, so he will get the fairly get whatever he invested. Here impact of by the withdrawal of another investor or adding some another person, then the NAV will be adjusted to reflect the change fund sum while preserving the professional value of each investor. Now rebalancing, I think rebalancing means involving adjusting the asset allocation of portfolio to bring it back to its targeted or desired allocation. So here we will assume one target, we will allocate one desired allocation will be there. This is typically done periodically to ensure that portfolio stays aligned with investors' risk tolerance and investment goals. Now we will consider one example. Here consider a portfolio initially consisting 60% stock and 40% bonds. So in balance sheet we have 60% stock, 40% bond. Okay, it will be okay. And with we have target will be, our target will be we need to make 70% stock and 30% bond. So this 40 30 60 become 70, 40 become 30. We need target allocation. Over a time, due to market fluctuations, the stock portion will went for 75%. So market appreciation is there, market went up, market in bullish trend, so because of that equity will increase and bond portion will decrease to 25%. But what we need, equity will be required 70 and bond will be required 30. Now we need to rebalance the involving selling some stocks. So we need to sell some 5% stocks, we will get the 70%, and we will need to, by using this 5% we need to buy this 5%, but it will get the 30%. Here this will be there. So one desired allocation, we need to set the desired allocation by buying or selling after the market differences happen. And here suppose you are managing one hedge fund and your fund manager's strategy, original strategy will be 70-30 allocation and it went to 75-35. We need to rebalance now. So assessment will be current assets allocation 75-25, target allocation 70-30. We need to sell that portion stock 50,000 to bring stock allocation back to 70, use that proceed to buy more bonds, then allocation becomes 70-30, results will be 70-30. And by regularly equalizing and rebalancing, you maintain fairness among investors and ensure that portfolio aligns with its intended strategy, contributing to long-term success in the world of investment banking and equity funding. This is hedge fund related information. So